So the major economic data is out the way. We have had our interest rate raise, and we've been addressed by Jerome Powell of the Fed last night. And of course, the markets moved as a result of that. If you do have a look at the crypto bubbles chart over here, there's been a major pullback across the board, which is why I said yesterday that I'm taking my profits and de-risking out of that long trade that I was in. But we'll cover all the important things that you need to know for today, as well as for the rest of December. Without further ado, I think let's get straight into the show. And I think Rabbit says it best over here. He says, same speech, same points for months, absolute consistent. Yet somehow in the few weeks gap in between each meeting, the markets convince themselves that it's all lies. And he says LMFAO there. So, I mean, I tend to agree. They've really been hitting home with what their plan is and how serious they are about getting inflation back down to 2%. And if you were looking at this, the dot plots, again, this may be a new term for some of you, but essentially this is where the different committee members of the Fed vote on what they forecast the future interest rates to be, or their future inflation rate at least to be in the months to come. And you can see if you put them next to each other in September, this is where they were voting. And then we went into December and that jumped massively over there. So September versus December, it was 5.5 to 5.75% for 2025, meaning that they still foresee high inflation rates. And Jerome Powell basically said that the reason for this is because the core inflation came in higher, which is one of the reasons that the dot plot estimates went up. And consequently, the market proceeded to dump immediately after that. Why is that? It means because now it gives them license to continue to raise the rates. And it may be unlikely that they've pivoted and we're going to go back down to, well, now 25 basis points. So from the 50 down to 25, it means that probably it's going to be 50 or potentially even higher going into the next meeting, which is happening in February. Also, make sure you go through and on my Twitter page over here, vote on which box you want open, because, of course, we're going to be doing the giveaway competition over there, giving away free money. That is part of the Christmas spirit over here. Have a look if you want to participate in that. All you need to do is sign up using this Christmas BYBIT link over there, and then deposit $250. And we're running this until the 25th, so for Christmas. All right, moving on. So 17 out of the 19 different Fed officials who vote on this, they see the Fed funds rate now above 5% versus 0%. We're viewing that in September. So overall, that means it's hawkish. Dovish versus hawkish. Remember, dovish means it's gentle and good. Hawkish means like a hawk. It's bad. It's out to kill. That's basically the way that you can look at those words if you are unfamiliar with that. Using zero hedge over here, they outlined as well some key components and metrics using different averages, and he says here that the Fed projections see weaker economy in 2023, higher unemployment rates, more inflation, and 50 basis point higher Fed funds rate. Powell is taking full responsibility for pushing the US into a recession. So it looks like that's the route that it's going to go. They will rather go into a recession than have inflation run out of control, because once that happens, you're in major troubles. You can look at look at any other country that has experienced hyperinflation. So they're dead set and serious about that. And he says, remarkably, the 2025 median dot plot rose to 3.1% versus the 2.9% that it was in September. Majority at the Fed believe that inflationary impulses will last, and that's a scary part, 3 years. So it could take up to 3 years, according to them at least, to bring the inflation back under control to the 2% level. What I do want to touch on that, I'm not a macroeconomist, but I have listened to a lot of different podcasts and views from top macroeconomists, and what they have said is what you may find is that 2% target will maybe come off the table once we get down to about 3%. Then you might hear that the Fed will say, okay, look, we're going to ease off on the raising of interest rates. We're happy with 3%. That's good for now. Let's stop. And then the threshold of an inflation rate at 2% now becomes a threshold of 3%. So keep an eye out on that. If you can remember this into next year, this message that I have, then that is one thing that I'd focus on. Once you start to near 3%, then you really want to start to look for your investment opportunities, because you want to anticipate and, of course, front run the Fed that they could be pivoting at any moment. So DB over here says that the dot plot peaking at 5.1% indicates that the Fed is taking a more aggressive approach to managing monetary policy. This could have significant implications for the broader economy, including the impact on Bitcoin. Time to brush up on your macroeconomics. So it is something important to focus on. I prefer technicals because macroeconomics has too many moving parts, gets very complicated. But I think when it's relevant, like today, it's worth touching on and just giving you guys a recap. And I think Crypto Chase gives a good recap. He says, essentially, these are the main points. High rates for longer. He said that committee will not consider rate cuts until confident inflation is moving back towards the 2% in sustained manner. Remember the alpha I've just given you, 2% may become 3%. You want to hold on to that and remember that. He says changing inflation goal of 2% is not something they are considering, but most macroeconomists that I've listened to say they probably will do that. And that's part of paid services. So it's not just opinion. I pay for macroeconomic data, and that is what they have told me. Hawkish dot plot 5.1% end of 2023, 4.1% then in 2024, and then only 3.1% in 2025. That is a freaking long way away. Someone below here says bull run in 2027. Please don't let that be the case. That would be terrible. Price-wise, what's going on over here? Weekly chart, high time frame, volatility continues to contract. You can see that by this little tick down over there. That has not kicked onto the upside yet. I told you guys this will be a primary area of resistance, a strong level. We didn't even make it there, which means it's actually weaker than it looked. I thought for sure we're going to at least tag this region, but I thought there's also a chance that we wouldn't, which is why I de-risked my position sooner rather than later. Pretty much things only start to potentially change once you reclaim the middle Bollinger Band on the weekly chart, and then you start to sit forward in your chair and pay attention, because once you clear that level, then potentially you can talk about a bottom being in. But for now, it looks like this area is going to be really, really tough to clear, and we may likely reject from there. There was one significant thing that was unfolding, and that is the RSI on the weekly chart. I visited this about a week ago or so, maybe 2 weeks ago. I thought, let's look at it again. Yesterday, with Bitcoin rallying, this line was extended all the way up towards the outer side of this circle over here, the orange circle that I have. And this is why you need to wait for confirmation when it comes to trading or investing even. You want to see confirmed closes and a breakout of the RSI through this level. That would indicate that maybe the bulls are starting to take control. But as you can see, with price pulling back, so is the RSI. And this may just be another weekly trend line rejection on that level. So I will be focusing on that. If you do clear that level, though, then the areas of interest that come into play, first and foremost, is, of course, the 21 exponential moving average at 20,000, currently at $20,200. Once you clear that level, then you can start to contend with this will be the next major area of interest. I'm telling you this now because obviously we're going to be going away on vacation for a while, and we won't be doing as many active streams. So I just want to forewarn you now on the high time frames so you know what to look out for. If Bitcoin does get above this level, the next major area of interest is going to be the 200 moving average on the weekly chart, which is the purple one over here. So put on a 200 MA. That is going to act as resistance, as well as the 200 exponential moving average, which is the white line over there. So that is coming in. Let's assume it happens sometime over the next week or so, $24,000. That is, if we do clear that, $24,000 is then your next major zone to pay attention to. Inverted chart is still telling us the same thing. We have an uptrend. Uptrend means downtrend because it's inverted. Nothing has changed here. I did touch on this yesterday. You need to see this break this trend line, and then momentum will start to shift, and then you need to break this higher low, which is at 21,000. So a lot of pivotal levels coming in, mostly around 21,500. 4-day chart. we had a spike directly into the underside resistance, this box over here. And I said potentially we could hit that purple moving average. We didn't get quite there yet, which is why I say that it looks weaker than what most people realize. And once you clear this level, same thing as the weekly chart, momentum begins to shift. And then you break above that zone over there. And now you can start to look for new uptrends. So once you break this level, it will probably move up rapidly into that $24,000 region, which is the 200 MA and the 200 EMA on the weekly chart. Then you can expect a rejection and a pullback. So let me just draw it out for you, just so you can see what to expect. If, this is a big if you break this level, you get above, test that as resistance. Once you break this, now you're talking about the potential to start looking for longs. Okay, so you break above that level, probably rallies into the 200-day moving average, 200 moving average on a weekly chart, and the 200 EMA, which is about to cross. Reject off that, and then I would look to buy the next pullback, wherever that may come as an investor. By the way, if this happens, I am on holiday. I'm going to be away. I will definitely keep you up to date. Follow me on Twitter. The link is, there you go. Just type that in, or the link is in the description below. Make sure that you're following me there. That is where I'll keep you up to date. I can upload videos on there as well if I can't go live. Okay, I want to also touch on what Sven says here. He's one of the guys that's calling BS basically on the Fed's dot plot. He says Powell made no sense. No rate cuts until inflation moves towards 2%, he said. But publishes a 5.1% dot plot with rate cuts only in 2024, while CPI math is already implying that 2 to 3% CPI is going to happen by summer of 2023, which, taking him at face value, implies rate cuts by next summer. So if you do want the other end of the coin, follow him, Sven Heinrich, the Northman trader. He has been on the show before. He's basically calling BS, and he's looking at the yield curves, which I'm going to show you as well. And they do look like they may have topped. And he says, no wonder the bond market is not buying any of what he's selling. And he says, and then he casually drops in a longer term project to perhaps raise the inflation target. Come on. So we'll take a look at that in a moment's time. Here you also have this account which says Powell keeps saying the Fed's best estimates as of today. That is because these estimates might not be their best by the next meeting, because we will have more data to chew on. Powell is green lighting a 25 basis point move in February. So there is conflict of basically between the different macroeconomists over here. These two guys are saying that they're calling BS, and the reason why is they're looking at the 10-year yields and the 30-year yields, which I'm going to touch on in a moment. Macro Alf, though, who's also been on the show, he says that financial conditions have eased and Jay Powell doesn't like it. He is telling you that being long on the SPX, so the S&P 500, the stock market, is pissing against the wind, literally. So I don't know whose side you guys are going to take. I always tend to side with the trend. That is your best friend. The trend is your best friend. And I don't think that you need to pay attention to too much of the noise. It's all fun to look at, but at the end of the day, you want to look at the trend. So far, I tend to agree with Alf, who said that you're pissing against the wind if you're long. And the reason why is because we're in a strong downtrend and you're coming directly into resistance. But if you do break this level and you start to clear above, then I would start to agree with the other guys that maybe he is going to pivot, go back down to 25. Maybe inflation is actually under control and they'll change their dot plot in 2023 to much lower levels. And therefore, we can hopefully commence with a healthy market going into the future. But at the moment, the trend is my best friend, and the trend is 100% to the downside. There's absolutely no gray lines over here. You can just look at the chart and that tells you exactly what you need to know. 2-year yield, though, has this topped. Potentially on a daily chart, potentially this could start to lose these levels. Once you drop below 4%, it's going to get quite aggressive to the downside. 10-year yield, same thing, nearing its key level. But could this be a top? It hit a major resistance zone, which I marked out from many years back. Could also have been a top. We need to wait to see. 30-year looks to be the same, coming into a key level right now within this zone over here. But this could potentially be a top. Now we need to see when there is a rally towards the upside. Is there going to be a low high? I tend to trust the charts. If this does look like it's forming a major top over here, and you see it come down, come back up, and it kind of hovers around this area. Then once you start to consolidate within that area for quite some time, we may start to see bottoms being set within the stock market, and that might be front running the Fed. Leading into the next major meetings. So in other news, though, you have guys like Elon who have been selling the heck out of their stocks. Here you have Sawyer Merritt. He says, breaking, Elon Musk sold 21 million shares of, well, we can basically round that up. It's 22 million shares of Tesla Monday through to Wednesday, worth 3.58 billion, according to a new Form 4 filing. You know, with the SEC, they have to file anything that they're doing with regards to their stock. And here you have Steven. He says that nothing left to say at this point. He's now sold 40 billion since the top and has said every time, okay, now I'm done selling. Non-stop pumps and lies to convince retail to keep buying while he uses them to cash out. And guys, this should be quite a serious thing. I mean, when you look at what billionaires are doing, some of the richest people in the world, they literally still selling. So if they're selling right now at this exact moment, do you think that you should be buying? I don't know. I don't know about that. Let's look at the Tesla stock, though. Looks absolutely atrocious. If you take a look at that, it's just about to lose its 200-week moving average. And pretty much it looks like all support is gone. Let's just quickly make this a bit bigger for you. I'm on a weekly time frame over here. This looks like some sort of an altcoin that's had a blow off top over here. And once you lose these levels, if you are holding Tesla, I do feel for you. I mean, this is kind of one of the last lines in the sand. I see about between this 127 and 120 mark, so between 120 and 127 potential bounce area, but it's probably just going to bounce and then get faded. Over time, this chart looks like it's definitely headed anywhere between 58 and the ultimate lows, or the ultimate base, that it has, which is around $25. That would be still how much further down from here? Let's just grab the ruler. Okay, from here to here, over time, that could still potentially be another 82%. And by the way, I know that you might think that's a super, super bold call, but the reason that I'm calling this is you'll need to look it up. Go look up the hyperwave theory. Hyperwaves work in 7 different phases. Usually you have a strong layer or level 1 base. Then you go into phase 2, phase 3, phase 4, and then once that breaks down, you return back to phase 1, which becomes the new phase 7. And long story short, that is basically pointing all the way back down to the bottom over there. So something interesting to look at. A lot of these stocks look like they're still going to be heavily hit. BNB. I'm sorry to come to you with more bearish news. This is not my chart, but it's Matthew Highlands. He says, BNB head and shoulders pattern, wait for the neckline to break for confirmation. I'll click on that and make it bigger. We can take a look at it. He's got it on a 1-day chart over here. Similar levels to what I pointed out. If you start to lose that 249 area, 250 area, BNB is in big, big trouble. So I don't know if this is the story is finished yet, but on the other end of the spectrum, head and shoulders only confirms when you break the neckline. And until then, this continues to remain support, which technically means it could still be a buy with a stop loss just underneath. So that is for you guys. If you are trading BNB, that is pretty much the picture over there. Now, part of the investment portfolio, or the long-term hodl portfolio, and I have Vulcan Forge, which I outlined yesterday in the daily candle newsletter. And this is basically what I identified. I said, pretty much looks nasty. Obviously, big sell-off from the top to bottom over there. But the one positive is it seems to be finding a major support and trying to create a base within this area over here. So I said anytime that it swipes the $2.80 level. So if you see price come back down into that zone and you are looking to accumulate this is a crypto gaming platform, then that could be an opportunity to add to your position over there. Simply have your stop loss below the previous lows over there, because if you start to gain acceptance, what is acceptance? Acceptance means that the market accepts that price has lost the support level and it gains acceptance underneath that zone, rejecting from there, I would cut all positions because then it's probably going down to $1.48. So that's what I'm viewing over there for Vulcan Forge, potential accumulation zone that is forming. Now onto Bitcoin. I'm going to clear these lines out over here, the vertical lines, because we are done with them. It came into the underside resistance, which I outlined to you guys, straight into that box over there, rejected. Now what you want to do is you want to still keep track of the orange line over here. Remember, the more times you test a particular area of support, so this is a diagonal support line, the more likely it is to eventually break. So you have 1 test, 2 tests, 3, 4, which we broke, dip below, came back up, created a spring off of that, and this would be the 5th touch. But you do have a lot of support with these moving averages that are coming into play. So in all fairness, I would probably buy this once again. If it does come into that level over there, I will most likely buy that zone with my stop loss below the previous low. So you need to manage your risk. It's a little bit of a harder trade than the one that we took from here to here. So that's kind of what I'm watching over there. I am expecting a pullback. You can see we already wicked down into the June low, and since then we've been bouncing off of that zone. Holding the different moving averages over here and getting them all postured back up would be a long-term good sign. Okay, there was the trade that I took. Take profit happened at 18,150. Rejection from that level. This trade is over. I will be deleting that. Now I'm still tracking exactly what I said on the daily chart. It works the same on the 4-hour, the higher lows. I'm just looking for the next higher low to form pretty much somewhere within this region. If price action pulls into 17,200, I'm a buyer over there with my stop within this region over here. If it does break this trend line, I will still buy, by the way, because a trend line is just a guideline. These things can be adjusted, technically speaking. Maybe it would look something like that. Maybe you want to work it from body to body, and then you don't have an as aggressive one. Maybe price comes down into 17,000. So for me, it's more the horizontal levels that I'm looking at. I'm more focused on this zone over here. I want to see that level defended. So any price action that comes into this zone over here, I'll be looking to potentially load up. And remember, the resistance doesn't change. The resistance that I've shown you between 18 and 19,000 continues to remain strong. It just means that the more time that you knock up into that resistance, the better the chances are of eventually breaking it. So I'll buy over here with the hope that maybe we get a push through on the other end. This is talking to traders, not investors. I'm still not an investor in the market. Okay, another good thing that's happening over here, if we are starting to establish a trend at least, is you do have an inevitable cross happening between the 50 and the 200 exponential moving average, which is on the 4-hour chart. Now, I have told you guys this before. It's been a long time since I've mentioned it though, but anytime these crosses do happen and you start to establish a new uptrend market, always what happens is price tends to pull back into that cross. So you can expect, where does that cross come in? Right now it's at exactly 17,300. So expect that a pullback could come as low as 17.3, and that would give you a second chance to go long if you believe that the market is going to shift. Okay, looking at the open interest chart, open interest was all over the place yesterday, up and down, still continuing to trend up. You still have the stablecoin margin contracts, which are the leverage traders on USDT and USDC pairs. They are still pushing pretty much price to the upside, so going long. And then you have these spot traders as well, which sold off slightly, and it looks like they're right now trying to reaccumulate, basically, which should be forming the next higher low. 2-hour chart still within a range. Here's your main range. You can see that rejection from this zone over here. Massive wick left behind. Failed to gain acceptance above that zone. If you see price again, reclaim this level. So this is why you want to be buying within this zone over here. Next time you probably break through, and then if you can retest that, that's your next confirmation. You can continue to add to your position and looking for higher prices. I don't rule out the downside, by the way. High time frame, weekly chart, 4-day chart, 3-day chart. Risk continues to remain to the downside. Low time frame, there's still a little bit of momentum that could potentially get prices higher. So guys, I think that brings us to the end. Let's quickly do the giveaway. Let's grab, where is this? Here we go. Let's move this across. Okay, let's just refresh. If you haven't yet signed up for the competition, well, you don't need to sign up. All you need is a BYBIT link. In the description below, you'll find everything you need. Box 2. Box 2 is the winner today. It seems like box 2 is often the favorite. So let's get going. I'm going to pick between, there we go. Winner is going to be 1,423 on the list. 1,423. Let's just open that. Go to the new ones. Okay, let's grab our hat. 1,423. All right, let's see. 1,400. Where are we at? 1,400 up. There we go. 1,423. So if your user ID number is 14028,280, again, 14028,280, then all you need to do is you message giveaways at cryptobanter.com and they will fund your account. But how much will they fund your account with? Well, that's what we need to see right now. So box number 1, I'm going to start with box number 1. Had you chosen that, you would have won $500. If you had chosen box number 3, you would have won $50. I'm really holding thumbs for you. I hope that box number 2 is the one that's loaded with cash. If you chose box number 2, well, you did choose box number 2, but if you are the winner, $250. So not the highest prize today, but nevertheless, it is still vacation money. So $250. Congratulations to you. Reach out to giveaways at cryptobanter.com. If you don't yet have a BYBIT account, guys, I would appreciate if you use my link. It does help me tremendously. You have nothing to lose over there. Deposit $250 in there. You'll be added onto the Excel list, and you can receive up to $30,030. Massive sign-up bonuses. Definitely the biggest in the industry at the moment. That brings us to the end of the show. I would appreciate it if you could give this video a like. Give the video a like, hit the bell notification, and subscribe to the channel. We're almost on 600,000 subscribers. And that's it from me, guys. I will see you all on, yes, I think I'm doing a show tomorrow. I'll see you tomorrow. Have an absolutely stellar day. Cheers for now.